This is Jeff Scott, and welcome to this week's review. It's September 3rd, 2017. Well, actually, it's December 4th as it just past midnight. This is my top-down review. For those of you that are new, welcome. And for those that are coming back, thanks for returning. Please subscribe to me on YouTube. That's the only way you're going to get notifications, except if you're part of the HGSI board. I titled today, Missiles Fly, Houston Floods, and GDP Roars, and ultimately the market soared. This was probably the best week I've had all year. It's been a great year. This was just another great week in it. In some ways, special thanks goes out to the expletives that decided to break into my car in San Francisco and make away with my trading computer, iPads, Kindles, cell phones, 3 sets of headphones, tons of cables, hard drives, and USB sticks. Teach me to travel with all my toys at the same time. Probably the first time I left my bag in the car when I went to eat, I was assured by my friend that in Palo Alto nothing bad ever happens, which was not exactly what the police said. Also, it was another fun week because this week I bought myself another present. I bought myself a nice boat, a Boston Whaler 315, which is a great little fishing boat and other fun boat. And those that join me in our meeting back in December, perhaps will get to go out on the water. There was just a funny moment in the Scott house. My dog decided he didn't like my video, so he just jumped off the couch and stood in front of my bedroom door and cried until I let him in. This is for education purposes only. Any recommendation in the spirit of education, not investment advice. I'm a doctor, not a broker. I am independent. Nobody pays me to talk about their products. I have paid for everything that I've used, and trading involves risk, and you alone are solely responsible for any decisions you make. All right. Just for a second here, I always like to throw out the influences that make a difference to me. And I call my education, when I do it, be your own guru. When I do my presentations, I feel the same thing. And that is, you need to educate yourself, find those people that you trust, develop things on your own, and put it all together and become your own person, and don't rely on what I say or somebody else says about the market, about an industry, about a stock. Because at the end of the day, I might give you some great stocks to buy. I may have some real dogs, but I'm probably not going to call you personally and tell you when to sell them. You have to have your own style, your own trading plan. I started in CanSlim. It was improved by Morales and Catcher, Woodward and Brown. John Person is a great trader, mentor, developer of indicators, great books, highly recommend them, as is Van Tharp's Money Management, and then George Lee, my trading buddy for the Pacific Northwest. And then lastly, in the lower right-hand corner, Guy Cohen, who has some good education, very good education. I've actually done his options course, and some interesting scanners that are web-based. As the last couple of weeks, I've been pointing this out. John Person has a 3-day meeting in Florida on November 30th through December 2nd. I will do a 1-day meeting following that. This is a separate event. It will be in Palm Beach Gardens, Florida. For information about John's meeting, I know they got 2 or 3 spots left. There's the email. And if you have interest in my meeting, my email's there as well. Actually, it's not the email for John, it's the website. My meeting, just a little bit more. Join me and I'll demonstrate and teach my favorite tools and strategies that have led me to a 7-figure return this year. Actually, it's more than 48% year to date, but we'll just leave that number. Merging my learnings from Ian and John Person. The way I trade, I'm not tied to my computer during the day. I require less than an hour each night, and I do this working full-time building companies. Topics I'll talk about are HGS principles, learn from Ian, finding my A-trade, managing my trade stops and position size, my favorite option plays to increase my return, setting up my scans and trade station, and Thinkorswim, and putting it all together. Housekeeping, it'll be at the Palm Beach Garden Hilton Garden Inn, $400 if you're attending John's meeting, $500 if not, limited to 12 attendees. I will take you out to dinner over the top on Saturday night. I'll provide breakfast and lunch on Sunday, and weather permitting, and my day job permitting, we'll take the boat out on Monday, and each attendee gets copies of the videos of my screen from the as well as my PDFs of my presentation. I do not offer videos outside of the meeting. Occasionally people will sign up for the meeting and then cancel without a refund and then receive the videos, but I don't sell them separately. I have a lot of different software. I try to hide my desktop, but I need TradeStation, Thinkorswim, HGSI is my key analytic tool, as is EdgeRater, and then the others supplement my trading, including various seasonality programs. Here's highgrowthstock.com. I put this up here not because I get a commission or a bonus, but to point out it's a free 30-day trial. I'll be using it a lot today. And if you haven't seen it, you email me. I'll send you a 6-pack of videos that will help you get started. In addition to that, under investing strategies, you'll see a number of videos that I've done, as well as Ron Brown and others. I guess I'm going backwards here. Stock patterns are cyclical, and I feel like a broken record. It's easy when you've been in a downtrend for quite some time. You formed a base and you break out and the market goes to a buy. It's not as easy on a top because it's more of a process than an event. On the bottom, it's an event. Everybody will tell you that they went long on March 5th, 2009. Probably most did because it was a pretty obvious reversal. But topping can be tough, and every time I think we're rolling over, we take another leg off. So it remains to be seen how much last week's rally will carry. Futures are down a little bit, or quite a bit, because of the nuclear concern with the latest toys that our friend who runs South Korea, or North Korea, has. And so I think that's got some concern. But I've learned over the last couple of weeks, don't always believe the first move of the futures, especially when they really go too far. It's down 30 points on the NASDAQ, 53 on the Dow, 10 on the S&P. So right now, I'm still working under the premise that we're heading up on another up leg. But as I've also said, it's kind of like we've truncated the top here, and we're sort of been in a Darvas box, although we are breaking out to new highs. I approached the market differently. Since it looks like we have another leg up, I got deeper in the market, which meant I bought, started buying more stocks, bigger positions, calls, sold some puts out of the money, and some bull put spreads, hoping that the market goes higher. But if I'm wrong, I will quickly go to a cash in smaller positions and then sell premium as an insurance. I guess keeping consistent with a strong market, you could see end of day Friday sector review, and you could see a sea of green. Utilities were weak, as were some healthcare, although biotech was stronger. Some of the real standouts as I look at it, home builders had a good end of the week, as did casinos, foreign market ETFs, gold miners, interestingly financial and energy. Energy probably firming because of the floods. Let's go quickly into my Thinkorswim. I thought this worked better last week. And let's just look into one at a time. If I get the right way here, come on. There, almost had it. So here is the E-minis. The green is a 17, yellow is the 50, the red is the 200. It's a daily chart. And you could see the S&Ps are in a nice uptrend. Had a PPS buy signal come in on Tuesday as it broke above the moving averages. Here's how it ended the week on Friday. And this is where we are so far today. We're down 8 points, again opening up down because of concern about North Korea. Here is the NASDAQ. Similar new buy signal came in on, I guess probably Tuesday. And we are trading here today, opening down initially. All above the moving averages, still looks very strong. The Dow had been the strongest, a new buy signal as well. Shooting star on Friday, bothersome, opened up lower, trading back up. We'll see if it gets back to baseline before the market opens on Tuesday. Again, hard to be concerned about uptrending market above the 17, above the 50, and above the 200. IWM, so this is an ETF, not the futures, but this had sold off the hardest from 144 down to 34, 10 out of 144. Among friends, it's about 7%. And it's now moved up back to 140. It's now broken above the 50. The 17 still has to take out the 250 to be in a confirmed uptrend, but it certainly has had a big move. It's a confirmed short-term uptrend. Longer term, being above the 50, it's still in an uptrend. So again, this looks fairly strong as well. The VIX had ran up a couple weeks ago, actually living up higher than it's been. Fell hard on Friday, and is this Monday? Let's see. Yeah, it looks like this is Monday thus far, so a gap up for today. But the VIX has come down much as the market has stabilized, and what's been weak has been the dollar, continues in a horrible downtrend. Obviously, that's very supportive for gold. Now, if I switch to weeklies, very quickly, we have beautiful E-mini above the 17 weekly. The NQs, the same. The YMs have been in a buy signal going back to April above the 17, above the 50. There are no, excuse me, that was the YM, so let's just take a quick look here at IWM. The Russell Futures, again, nice uptrend on the weekly. We'll look at the VIX on the weekly, certainly is coming down here and couldn't even get close to the prior highs here from October, although it's still in a person buy signal. And then the dollar is interesting to me, and that is on the, if you get to the 200, we change the dollar. Traded down to the 200 weekly moving average and stopped. To me, that's a place where I expect it to bounce, and that would be potential pressure on metals and gold. We'll see if it holds, if it bounces, etc. Again, I like to look at charts different ways. This is my Genesis, and if I look down here at the weeklies on the E-minis, the NQs, the TFs, the NYSE, and the Dow futures, you could see we're in a long-term uptrend, and although it's been choppy the last several weeks, we are certainly moving up on all indices. Now, why were banks strong on Friday? Doesn't show well here, but we actually, this is now a daily instead of weekly, we actually had earnings creep up some on Friday on both the 10-year and the 30. Rising rates are good for banks, especially regional, and insurers. Bad for REITs, MLTs, utilities, dividend payers, and home builders. AD lines, again, hard to see, but the white is what we're looking at, and the white is leading the markets higher, so strong AD lines. Breadth, I look at the number of stocks above the 200-day and above the 40-day, and you can see both have moved up off their bottoms, consistent with a rally in the market. Here's the new high, new low, and as I say, from oversold 2 weeks ago, where I said we were at a reversal point, to last week in the middle, and now we're getting to the point where we become overbought. Now it can get quite a bit more overbought to get up to this bar here, but when it hits this bar, it reverses, and I'll be watching that every day to see where we are. The McClellan, just look at the weekly. Market's higher, sorry about that, and the McClellan is above the zero line on the oscillator, not yet up to the early 16 highs, but certainly getting up towards the highs of 17 and also approaching the October-November highs. And you could see the weekly summation index continues to make higher lows and lower highs. Buckets. 2 weeks ago, I talked about how we were oversold with many of the stocks in the last two buckets. Well, now we're getting overbought. The overbought in a bull market is much less meaningful than an oversold in a bull market. And you could see 68% of the stocks are above the midline in their Bollinger Bands. That's 68% of the S&P 1500. If I look at the Hindenburgs and we look down here, we see there was no Hindenburg here in the last 10 days. The last one on the NYSE was August 16th. So we're in a Hindenburg clear zone, and we're not even close. You can see the new lows are quite low. Market tone, we were in chop last week, and now we actually got some bull markets showing up in a couple of the indexes. So are the bulls making a move? From a sector perspective, we've gone from a relatively bearish pattern to now with materials, energy, healthcare, and technology taking a lead, showing improvement. So clearly there's evidence of a broadening base and improvement across the market. Canaries in the coal mine. Remember, these are some of the Facebooks, Amazons, Netflix, Priceline, and several other of the high movers. And I've created an artificial index. This is to give me a signal when the market's going to roll over. And we are basically at a new closing high and almost a new intraday high. So the canaries are leading the market higher after being weak to sideways the last couple of weeks. I also have my own index, and it is also, I don't know what happened to this slide, but it too is setting an all-time high, so pretty happy with that as well. So the Scott E index is also at new highs. Let me show you that one in the program very quickly. And what I do on my indexes, the Scott index is taking something that I learned from Ian years ago, and I basically took the leaders of the stock on June 27th. I created a index for this so that when this rolled over, I would get a sense that the market was either undergoing a change in leadership or perhaps it was time to get out of the market. So here's my artificial index, and you could see that it didn't form there. So let me go back, easy to fix, into here, and I want the, there we go, the designer. So I'm going to open this, close it, and say yes when asked if I want an index. And there we should have an index. And you could see very tight pattern, sideways, and it looks to me like it's getting ready to break out again. 2 pocket pivots a day, a kahuna on Thursday, and notice the weekly bongo is green. So I see evidence of a strengthening, not a market that's rolling over, at least as of today. Know your earnings and news. It's not a huge news. As we talked about, the markets closed Monday. And according to my wife, LVMH, who's the parent of Sephora, is buying Ulta, which has been a fun stock to trade over the years, although the last couple of earnings reports, it sort of was a dog. Other than that, the employment numbers came out Friday. I don't see a whole lot of big news, the usual suspects. I don't see a lot of Fed speakers, and jobless claims on Thursday will probably be the big thing, as well as some of the energy numbers. Here's the earnings. It's important to know your earnings date. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. I advise you to look up your own information. This is just some of the stocks that I follow. So my market thoughts: more markets climbing a wall of worry despite mixed economic news, North Korean missiles, and devastation of Hurricane Harvey. Growth stocks certainly outperform broader indices. Dollar weakness on the week drives up gold and other metals, but nears long-term support and may bounce from here. On surface, lots to like for the bulls: broad base, improving breadth, canaries and Scott index, as well as most indices near all-time highs. But this is September, overall the worst month for market performance historically. We had this weekend a test of a nuclear bomb by North Korea, which is certainly, as I predicted when I wrote this quite some time ago, is potentially going to cause the markets to open down. Unless, of course, like me, you've got a lot of gold that you've been buying over the last couple of weeks, which gold looks to open. But now that I said that, gold will probably fall. And my 13-week new high, new low, moving towards the overbought area, that one's probably been the most sensitive short term. Now, one has to separate short term from long term. According to Jesse Livermore, the best chance to reap big profits is to learn how to let the stock price run its full course. You have to be very careful as a trader, in and out, in and out, in and out, in and out, and then the stock, when you're out, gaps against you, or when you're in, it gaps against you to the downside. You have to know earnings dates. I don't like to trade against the market, but as long as the market is trending up, I give my stocks a little bit of room. When the market rolls over, then I won't be long anything, because I learned the last big move that even your big winners don't hold up when the entire market pulls back. Now, at my live session, I've developed some other long-term indicators that I'm looking at, and I'll be showing some of the research I've come up with, which helps me know when to stay in and out of the market. Now, people who've been here a while sometimes wonder why I go through that analysis as each week. To me, that's the most important thing. It should give you a sense of what I think the market's going to do. That really doesn't matter. You have to get your own sense of what you think the market is going to do. And now we can start looking at charts. The other thing that I use in the market is I look at my 6-point checklist on the major market indices, and I do that in TradeStation. So let me just show you that real quickly. And again, remember the futures that we look at, the last bar is the Sunday bar, and the Sunday bars are selling off, as you can see here. So we start with the E-mini. So I look at 6 points. Point number 1, am I in a person buy or sell? That green arrow is a person buy. And you can see I'm in a buy daily and monthly. In the intermediate term, I'm still in a sell on the weekly. Second thing I look at, what's the color of the paint bar? Green is bullish. I can go long or hold. Blue is neutral. Red is bearish. I should not be going long on a red bar. Green, green, and blue. So I feel pretty good on the colors. Number 3, am I above or below the envelope? And as you could see on Thursday when we moved up above the envelope, or on Friday rather, we came back in and we gapped down on the overnight hours. Not unusual. The fourth thing I look at is, are there any red dots on top or green dots on the bottom? And these are evidence of potential divergences occurring. And you could see we have no divergences today. The fifth thing I look at is my high jump. How close am I to less than 10 or greater than 95, both of which are reversal areas. And lastly is my weekly bongo, green or red. So the weekly bongo on the E-mini is probably the only thing that's bothering me. Other than that, it looks very strong, even with this drop down so far today. If I look at the Dow futures, very quickly, buy on all 3 time frames. In green, that's good. Within the envelope, no divergences. 31 and the bongo is green. This is daily, weekly, and monthly, so I'm looking at the middle column there. So the Dow, those 30 stocks, continue to look very strong. The NASDAQ is coming back some. And you could see the NASDAQ shows it's tired. It went above the outer envelope on Friday, as you could see here. It had the bearish divergence dots, which typically can go on a while, but suggest it's going to come back in, and it did. The third thing is, so that's the 3 things. Envelope, it's back in. So we got green arrow up, green bars, bearish red dots. Within the envelope is 4. High jump is fine, and it's a bongo weekly is green. So maybe this is just a short-term pullback here before it continues its uptrend, which would be my guess. And then the Russell futures. Also in a buy signal, although short-term like the S&P, weekly was in a sell, monthly's in a buy. It's green, it's within, no dots. 37, and the bongo still red. These indices look fairly strong. Obviously the 2 with the weekly bongo reds, and some of the short-term pullbacks aside. If I look at the dollar, one could see the dollar had a buy signal come in on Friday. It had some MACD positive divergence during the week. It's blue, so it's neutral. It's still in a long-term and intermediate-term sell-off. 17%. The bongo is red. Still has more work to do to go up, but as I said, it's pulled back to major support. Gold probably selling off, not because the dollar is dollar's moving down some, but the gold is up probably because of what's going on in North Korea. Note, it's at a buy, it's green, it's above the envelope, it's green on the bongo and at 100%. So what that tells you is this is the highest extended this stock is from the 200, the 17, the 50-day moving average in the last 200 trading days. So out of the envelope, highest extension. This stock needs to come back in. Sometimes great leaders continue to go higher, but typically a stock that looks like this is going to correct soon. So rising dollar could put a damper on gold. We'll have to see if what happens between now and Tuesday's opening. And again, this is being done with some markets, including futures, at least having some trading. Oil is now in a buy signal, although on the weekly you got red bars. On the monthly, we'll see what I pop up here. You can see how hard oil has sold off over time on the monthly. Oil still looks weak, but we'll see if it has a pop up here, especially. Well, you wouldn't expect it from the hurricane because you should see some stockpiles of oil because the refiners can't use them. All right, so now I've got a sense of the market I want to be long. The next thing I do is I just go into HGSI, go into Major Markets Plus, bring it into my warehouse, go to my top-down view, and get an idea of what's working in the market. So you could see, if I sort by raw combo, that small caps, NASDAQ, mid caps, NYSE, NASDAQ Composite are up at the top, volatility bonds, utilities, and some of the bigger stocks closer to the bottom. You notice, or you may have noticed I said growth outperformed this week. In fact, let's take a look at that. So one thing it's important for me to do is to look at my stocks and see whether or not my stocks are doing well, how they're comparing to the market, and am I in sync with what's working. So this week you could see, I had a pretty good week. These are the stocks that I had on Monday morning, and if I held them all, which I may have, 42 gainers, 4 losers, up 5.58% on the week. That was a good week. My filtered buys, which takes my buy list and applies John's principles, was up 80%, were up 5.16. Now the reason why I said growth was outperforming is the IBD 50 over here was up 3.49%. The HGS 100 was up 2.98%. The Market Smith Growth was up about 2.5%. And the S&P 500 down here was up only 1.37%. In fact, the only group that was negative was Best of Woodward and Brown. And when I look at some of my holdings, I had some stocks that had some big moves. Orchard Paper, Kite Pharma, Corset, Gilead, Insight, Esperion all had very big moves. And what saved me or gave me such a big return was there was very few things to the downside. So that sort of fits the small stocks and the biotech doing well. Take a quick look in HGSI. Here's the S&P 500. And what I'm going to do is clean this up a little bit. So uptrend, pull back to the major moving averages, a 17 simple green, 50-day simple blue, 200-day simple in red, the magenta is an 8-day exponential. We're still in a weekly bongo, daily bongo, then Hindi, so pull back to support and moved up. S&P here, to me, looks pretty darn strong. If I look at the Dow Jones Industrial Average, the 30 stocks, again, pull back and looks like it wants to go higher. If I look at the NASDAQ Composite, pull back to support, looks like it wants to go higher. Notice the Bongo Weekly just turned green. And if I look at the Russell 2000, it is still within a box here, and I'd like to see it break out of the box to get excited, but it is starting to look a whole lot less bad. If we look at the dollar, as I said, it doesn't show it here because it's daily, but if I go to a weekly, you can see the dollar sitting right around its 200 weekly moving average. If it breaks down there, could it fall all the way down here? It possibly can. I know there's a lot of people that are calling for a pullback, additional pullback in the dollar. The VIX, we talked about this not sustaining its move up, and one could see here on Friday that we actually triggered a Bongo Weekly sell on the VIX as the VIX has broken down on the daily. And if I look at gold and silver, we'll see some exciting stuff, especially if you're owning them. Gold had a very nice week, as did silver. But perhaps the place to be for me has been in the gold miners, which appear to be breaking out. With no disrespect to the red candle, it's still closed up on the day. Let me verify that. Yeah, closed up 6 cents, no big deal. All right, next thing I like to do is find out what things are working. So I go down to industry groups, number 7. There's 175. I hit the warehouse view. I'm going to rank them on 2-day force, which ones have the short-term momentum. Interestingly, exploration production, biotech, semis, autos, metals, pharma, internet, steel, apparel, and oil, gas, and then refiners. So one thing that hits me right away is 1, 2, 3, 4, 5 energy stocks make the top 18. Does that suggest the oil's breaking down or that oil's rallying? Pharma is well represented here with biotech and specialty pharma. So is steel with base metals, steel raw materials, and steel producers. So let's take a quick look at the top stocks in each of these groups. The only one that got above the index in the energy exploration was Cabot. I actually own this one, and sometimes I wonder why, because it's been very choppy. But it pulled back to the 50, had a couple pocket pivots in the kahuna, big breakout to recent highs on Friday, pays a small dividend. This is Cabot Gas. I don't usually go below the index. A lot of them look like this, stocks that were high flyers that have pulled back that are trying to recover. Lots of overhead supply. In fact, as Dan Fitzpatrick would say, all these people who bought the stock since the beginning of December or late November are losers today. And therefore, lots of overhead supply before the stock can take out new highs. Look at Apache, shows some bottoming evidence, perhaps, but look at all the overhead supply. So right now, I'm not a big bull on these energy stocks. Maybe the better play is to play an ETF. Biotech, these have kept me in happy times, and you could see the index is all the way down at 16. So very quickly, I'll run through them and tell you my thoughts of the companies since this is my space. Gilead's breaking out. The stock has been in doldrums forever. It's had the misfortune of setting high expectations on their hepatitis C drug, pretty much meeting them and beating them. Now there's competition. There's not much growth, and everybody's waiting for them to make an acquisition. They bought Kite Pharma, which allows them to acquire a very exciting new therapy for relapsed and refractory lymphoma. No revenue yet and no drugs approved, so it's a big risk. Obviously, the market is voting yes, it's a good trade. Gilead looks interesting. It looked a lot more interesting back here when the deal was announced. Bluebird Bio is another therapy in sort of the space of Kite, a little bit different approach. And you could see with Kite's acquisition, it too is breaking out. All these have run too far. Biogen IDEC breaking out to multi-month, multi-year highs. Celgene, this is one that probably hasn't run too much, is breaking out now into all-time high, or I don't know if it's all-time high, it's certainly recent high territory. Sometimes I hate having this thing here. Well, it's moving up to recent highs. Celgene may be more in a buy zone than some of the others. It hasn't totally broken out yet, but it's coming up with momentum off the 50 with a new weekly bundle that's green. Here's Kite. Here's the day it was acquired. I got into it back here in the 50s. Regeneron, another stock at a decent buy point. Bond goes green. Breaking above the 50, pocket pivots and kahunas, good earnings per share growth. Amgen, sort of stodgy old biotech. I'd wait till it got to new highs. I don't trust it here. All right, these are going down in quality, so let's just move on to the next one. Semiconductor devices. NVIDIA earnings are out November 9th. Looks like it wants to go higher sideways, moving up off the 50. Micron Technology had pulled back quite a bit, now breaking out to new highs. Looks buyable. AMD trying to break above the 50, not that exciting. Himax, an old name, breaking out to recent highs. Broadcom earnings are not out to December, about to close on its acquisition of who they buy, Brocade. Have to break above the PSAR, but this might be an interesting buy opportunity as well. I'll go down through all these groups. Automobiles, can we say, oh, Tesla isn't on the top. Just very quickly see what we see here. Ford, bottom fishing, I don't like that one. GM, a little bit nicer. It's in an uptrend, breaking off here out of a squeeze. Couple pocket pivots in a kahuna. The challenge is it's gone pretty far. I'd look to add to this on a pullback. Fiat's been a great move. I think they're an acquisition candidate. And Tesla, not right now. Base metals. These things have had great runs. This is Alcoa. Hard for me to chase these. These things have had big runs. Freeport-McMoran. Some concerns about copper pricing coming in. Century Aluminum like Alcoa. And the one that I've liked the most, and it doesn't have a group yet in HGSI. George, if you're listening, fix that, please. Oh, now it's precious metal, so it's back in. It's really closer to iron ore and steel material, but look at the beautiful run that Techminco has. This is one of my holdings. Tech Resources. Techminco used to be its old name. Specialty Pharma. Shire, the Love Your Eyes company. Hard for me to get excited. Yes, it had a big day on Friday on great volume, on good volume, which made it high force, but I don't see anything to buy there. Esperion is one of my holdings. Beautiful breakout here, breakout again. It goes sideways for a while each time. When it breaks out, it gets a pretty big move. I'm looking for that move. It's in a weekly bongo, does not make money. Beijing, I heard that Celgene walked out of a deal with theirs, so that surprised the stock traded up. But this looks pretty strong here. Just make sure there's no impact of the news on this because of Celgene. But up, sort of a flag to the 50 and breaking out. I like that pattern. Supernus, another similar pattern, sideways, breaking out here. Great earnings growth coming in. Ignita, I don't know much about. It's choppy, but appears to be breaking out here or trying to break out. Court is one that I've been owning now for a couple of months. It's had a nice uptrend, and now it's going into what's probably a climax run, and I'll be watching it closely and taking my profits. Internet media. Yandex, the Russian, I guess social media, breaking out here out of a flag with Kahuna's pocket pivots. This thing looks interesting. Earnings coming in ultimately. This is I'd put on my buy list. Baidu breaking out here off a high base. Facebook, sort of a high base flag, trying to break out. And then Weibo setting an all-time high. This has been a great holding for me this year. In fact, when I say that, it doesn't have it. All right. One of the things that you have on your phone is you could see your profit and loss year to date. I don't have it set up there. That's probably outside of Amazon. Amazon's been my big winner this year. Number 8, steel raw materials. Vale, look how these stocks have turned into growth stocks. Kind of like Techminco, which started lower down in the pattern, but nice uptrend there, pays a 2.5% dividend. We've been talking about this for weeks. Same thing with Rio Tinto. Probably not a buy point on any of these. BHP, they're all making nice moves. It's probably too late to buy them. but I did talk about them when they were right to buy. Specialty apparel, retail seems to be up and down off of a bottom. As I said before about the markets, the bottoming process is such it doesn't happen necessarily overnight. Here's Lululemon. Good earnings broke out here. Overall sideways pattern. Did have a kahuna and a pocket pivot. I'm going to watch it. I like the earnings coming in. Still has a lot to prove to me. L Brands, these are one-time great companies. But not now. And eventually it's going to bounce, and maybe this is the evidence of a bounce, but I'm not buying this stock until I see a reason to. Foot Locker, gap down earlier, does not look buyable. Shoe Carnival, better but still lousy. And then Gap. Unlike the others, Gap has actually broken above the 200-day moving average of the pocket pivot kahuna. Everything's green, mobile breakout from a squeeze. This might be an interesting one if the market goes higher here. And Urban Outfitters is below Chico's. Yep. Not finding a lot to like on the apparel. And then lastly, before I do some hip jumping around, I'll look at oil and gas services. When I don't see Schlumberger or Halliburton in the first couple, then I get a little bit nervous. These will be all beaten up. Rig, do you want to buy this? Yeah, maybe it's got, doesn't have a higher low. It's got a lower low, but it did have a kahuna on Friday. Weekly bond goes red. I probably would pass. Diamond Offshore looks similar. I don't see anything to like, so I'm not chasing these. Steel producers. I have some U.S. steel calls that I'm sitting on. Nothing is, let's see. I did that the wrong way. U.S. steel. Beaten up, trying to make its way. It's going to have some trouble with the 200-day moving average. Look at the earnings per share growth versus the multiple. ArcelorMittal, they've got a lot of different assets in the U.S. and elsewhere, kind of breaking out here with pocket pivots and kahunas. That one looks pretty good. Good earnings per share growth. Allegheny Technology, another one breaking out. And then AK Steel made my big list, and you could see it too looks like it's putting in a bottoming position. I'm not buying any of these unless I see a clear-cut move to the upside. So that's the 10 to the upside. Let's see what's to the downside. There were no short-term movers to the downside. That's how strong the market was. And again, no one really knows what's going to happen come on Tuesday, because we'll have another day to digest the atomic bombs from Korea, and we're sticking down about 26 points before, on the futures for the NASDAQ. If I look at the intermediate up, this is interesting. So even though the market's been kind of rough, I've only got 2 groups or 3 groups here that are down on a longer time frame, which means I should see a lot of 82 groups are up over a longer period of time. Here's your biotech, your exploration, your semis, your specialty pharma. It looks like the exact same groups we just looked at. Isn't that interesting? So they moved so much that the group's movement over the last day was enough to control the last 5. I do a number of scans, as I showed you last time. I have some pre-fit scans that are done in TradeStation, and it looks like that one didn't pop in, so let me open it up. That's not the one I want. Actually, it's right here. Let me stop this for a second. So what I do is I have a number of scans that I run looking for specific buy points, sell points, different indicators, because you can't look at every chart every day. Over the weekend, I look at 600, 700, 800 charts, But during the week, I let my scans do the work, and I look at the stocks that come to the top of the scan to give me an idea of what I want to do. That scanner is a key product within TradeStation. It's mostly end of day. Now within Thinkorswim, I can do the same thing, and I could look for, these are stocks that have a PPS buy signal with a positive MACD divergence. And let's see if any stocks made that. And you'll notice that in my screen here, you could see, was there high closed doji or low closed doji, pocket pivot, kahunas. This is a sort of a proprietary thing, but when it's a 1, and it's green, it's a institutional buying power. So these are the stocks that made my list. Lulu being one that we talked about. So I use the scan to actually start me looking at my charts. So take a look at my buy watch list and see if there's anything I want to talk to you. Maybe I'll run through it quickly before we say goodbye. Now my buy watch list is good until 9:31 on Tuesday, because once I see how the market opens up, it'll give me a clue as to staying net long or going short. So I'm going to go quickly because I think we've seen a lot of these already, which shows the benefits of top down. I can do it very quickly. I don't need to look at 600 or 700 charts. So the highest ranked stock was Micron. We already, don't do that, Jeffrey. We already looked at it and said it might be time to start nibbling. Yandex, the Russian media. A lot of the casino companies made my list this week. The buy point would have been closer to 135. It's at 143. It's getting late to buy Win, but I look at this earnings per share growth. I want to own Win, so Win I'll be watching. I'd love to buy it on a pullback. Cabot Oil Gas we just looked at. Weibo we just looked at. America. You know, the stock's been going nowhere for a long time. And let's just flip it so I can take out that box. So I guess I could go with the we're living in a Darvis box. I'd like to see it break out one way or the other before I spend much money. That said, you can buy it at the bottom and sell it when it gets closer to the top. You can swing. Bank of America, I have 2 positions. I have a long term from the $5 or $6 range in stock, and then I have a short term play of options that I take based upon the charts. Regeneron we looked at. Sina is a Japanese company that has to do with gaming. And as you can see, it's in a nice uptrend here, a little bit loose. It had a pocket pivot Kuna on Friday. Everything is green. Gold miners bull. Doesn't look like much there, does it? But this is a move between 42 and 28. This is a big move, and it's funding some of my other trades because I took a position in Nugget. Citigroup, a lot like Bank of America. Tenet Healthcare, don't know much about this. I got amused it's breaking out of these indices, breaking above them with a pocket pivot, a new weekly Bongo Green. I saw this huge earnings per share coming in, so it's enough for me to put some due diligence. Clovis Oncology is a biotech with a drug called PARP inhibitor, similar to what Tesaro and AstraZeneca has. It's been a buyout candidate. It's recently sold off. Is this ready to go higher? Perhaps. Restoration Hardware, again, talk about a pure technical buy. It broke out of the 200 back here, had a nice run up from 40 to 80, now it's done a round trip. To me, I like to buy them when they pull back to support. CF Industries is a fertilizer maker. It doesn't make money. I got interested because the time of the season, I saw some others were moving a pocket pivot into Kahuna, taking out its moving averages with a mobile breakout. Holly Frontier of the refiners, kind of a cup and a handle and a breakout, maybe. Here's another cup, handle, breakout. Refiners are going to go up. Gas is going up 3 to 5 cents a day. Holly also pays a 4.1% dividend yield. Aspirion, we talked about earlier. This is one of my holdings. Continues to go higher. Looks like it's breaking out again. Las Vegas Sands is a junior to the win, but still very senior casino. It's pulled back here, broke above the 50 with pocket pivots in the kahuna. ADP, the guys that write your checks at work. The only thing that this showed up for was it's sitting right on the 50. Excuse me, probably shouldn't be in my list. Already looked at aluminum. I showed you Diamondback. Here's another energy play, the same thing. Yes, it's higher highs and higher lows, but it's a beaten up $50 off its highs energy play. Kemet is a beautiful biotech. Looks like it's going into a climax run, but this one, every time I say it's too expensive, it goes higher. Chemours is a specialty chemical company, also very nice lower left, upper right. Melco's a third of the casinos, breaking above the 50. Tech Resources, I already showed you. Supernus, I already showed you. Peabody Energy is purely a coal play. We have a pro-coal government, so perhaps that will help the stock. Not a whole lot else to say. A couple of kahunas and a breakout. Bunge is another fertilizer company sitting on the 200 with a kahuna. Makes money. Welltower, HCN, is a REIT that owns medical establishments. I don't love this stock. I did like the pocket pivots in the kahunas. The new Bongo Green pays a 4.7% dividend. ETE may take advantage of some of the issues going on with Harvey. Chance to perhaps raise its rates, but a Bongo Green weekly, pocket pivot and a kahuna, great earnings per share growth, pays a huge 6.9. IMAX kind of looks like the other bottom fishers. Is it time for IMAX to rise? Looks to me like it wants to go higher. Notice the multiple pocket pivots in the kahuna. Parsley Energy, ditto the other energy stocks. Same. Copa Holdings, probably the most impressive airline stock of the bunch. I believe this is a Latin American based carrier. And, yep, one's got to be impressed with that pattern, sitting right on the 50-day moving average and a squeeze with a kahuna and a pocket pivot, probably a great buy point. Banco Colombia, this is probably the best looking bank stock I saw in my review. It looks like it's ready to break out or it's broken out to new highs in a long-term uptrend. Deckers, shoe stocks got hammered this week, yet Deckers is creeping its nose. The UGGs guys above the 50 with pocket pivots and kahunas and everything went green, Mobo breakout and a squeeze, and a PSAR reversal. So almost all my buy signals fired. I'm still nervous with Deckers, but Deckers might be an interesting short-term play. AK Steel, I already showed you. Urendi, Yard, big move up, pullback, setting up a high base, probably wants to go higher. Here's another steel producer, European Parties. Uptrend, sideways, getting close to the 50. Pocket pivot and kahuna, it wants to go higher. Global Blood Therapeutics. You probably don't want to get into this thing until it takes out maybe 34, 33. It's been going sideways for some time. Livanova is a medical device company, a small one, but it too uptrend sideways. Kahuna is ready to break out there. Another chemical company, Kronos Worldwide, earnings are out, nice steady uptrend. And another exploration company that they all look the same, they all have got problems. Aerie Pharmaceutical, only reason this made it is because of Bongo Green and some pocket pivots. And Carix, kind of a junky looking chart. It just looks on the right edge like it wants to go higher. OPCO Health, licensed drugs and other people develop them. As you can see, it's been beaten up. If I remember correctly, they have royalties on Verubi, which is Tesaro's antiemetic, and if they get their injectable formulation approved this year, I might expect this to go higher, but right now it's a bottom fish. Caesars, another casino, probably be more concerned with them because of their debt. SRC Energy, kind of not a bad-looking energy stock, sitting right below 200-day moving average. All right, we're almost done, then I'll quit. LPL, nice uptrend. Could set your buy stop right above that PSAR dot. Fill it if it takes that out. Triton Industrial Distribution, just a nice lower left, upper right curve. Teradyne, another one of these that kind of looks like a box, where I've talked a lot. But in the box, I probably don't play it. XENT, what a nice lower left, upper right, very tight. Breaking out here, mobile breakout squeeze and kahunas in the biotech world. Air Transport Group, looks like breaking above the 50. Not otherwise that exciting, more for a watch list. And Fluor Corp, another one of these beaten down stocks that looks to me like it might be getting ready to turn around. Carlyle Group pulled back to the 50, just needs some momentum to take off, pays an 8% dividend. Gramercy Property Trust, one of the REITs, 5% dividend, sideways here. The old Janus company, uptrend, sideways, sitting on the 50, looks interesting. And another REIT, Care Trust. Semiconductor Manufacturing, AXT. Here's an interesting energy stock. It pays a 1.7 dividend. Ecopetrol, I believe, is Argentinian. Is it Peruvian? It's Peru. Northern Peru and Colombia. Relatively stable areas. Certainly gets a discount to its growth rate. Pays a small dividend. This is one to watch. Ladder Capital pays an 8.7% dividend. PGT. Nice uptrend. New PSAR reversal. CAI, nice tight lower left, upper right. So what do I do with these? I take those stocks and I stick them into radar screens. And what I have is I have my buys sitting here. And during the day, I'm going to watch for new oranges to start blinking, new greens to start blinking, or if the stock's going the other way, new red. So my signals, when they fire during the day, will fire on the radar screen. The end-of-day scanner only picks up a daily bar at the end of day. So I'll use radar screen. Now, you can use Market Watch in Thinkorswim. You won't have all these because some of them I had to program myself. But it's not nearly as powerful as radar screen. Well, just to recap, we had a great week despite a wall of worry. That wall of worry continues with the hydrogen bomb that North Korea is threatening us with today, and the futures have sold off hard. The market for stocks is closed on Monday. We'll reopen Tuesday. My feeling is we go higher from here, but I have to temper that enthusiasm with the fact that September and this Korea thing could get out of hand. On that note, I hope everybody has a safe Labor Day, a great time with family. If anybody knows somebody that's carrying around a new Tubi